Hey, what's going on, everybody? We've finally done 16 months of investing $10 a day for our 10K challenge. We've been using Robinhood primarily for this, and honestly, the results have been way better than I've expected. Anyways, aside from misspeaking, we were able to achieve over a 32% weighted annual return. Now, jumping over to Robinhood, we're going to just look at what kind of alpha we've been able to achieve. So, looking at the NASDAQ, we'll go to the 1 year, sitting at under 22%. So, we are actually at around 11 alpha against the NASDAQ. And when we look at the S&P 500, we're looking at about a 10 alpha. And for any of you that don't know what alpha is, that's basically the percent that you beat the market by. So we're able to achieve over 10 alpha, which means we beat the market by over 10%, which is crazy insane. Anyways, it's been a really good month. We've been able to recover quite a bit. So as you can see here, we go to the yearly. We hit this high over here around November, dropped down, went back up in December, dropped down quite a bit, and now we're basically recovered to those levels. Can't really say the same about the stock market right now, so we've done pretty well. Going over the actual holdings, let's just look at this. We've got long-term treasuries on top, basically down on that position, but that position has actually been able to keep us up because interest rates actually started going down a little bit. So that means our position has gone up a little bit. So that's been a little bit of a hedge. I'm honestly expecting TLT to be we're going to hit 10K, I think, by the end of 2025. But TLT, I'm expecting that one to grow all the way to the end of 2026, maybe a little into 2027, depending on how Fed interest rates go. So I think we'll hit 10K before we actually get any substantial gains from it. But you know what? We're collecting monthly dividends on it. Those dividends are going into stock purchases. So I'm totally fine with holding that as a hedge. Ulta is our second biggest holding. Not much to say there. There's definitely some recovery room still. We bought here, basically we sold here, bought here, sold here, and we bought around this area, and now we're just holding. So I don't think I'm going to let go of Ulta anywhere, probably only around close to like $500 a share. Elevance Health is our next one. We're pretty much break even on it. This one's been in a crazy downtrend, and it's starting to look like it's a potential reversal, but you never know. This could be a dead cat bounce and it goes back down, but this is a company that I'm totally fine with holding and buying more of. I think it's a fairly strong company that got good cash flows, low debt, so I like that one. CVS, another one that we're pretty much break even on. This one's had a pretty nasty downtrend over the past 3+ years, and we started buying it up under $60 a share. We were able to average down to $55 a share or so, so we're pretty much break even on the position. I think it's got some potential. It does have a lot of debt in the company, so if interest rates end up going up from where they are right now or staying where they are right now for a long time, I think that could cause some issues for this company, but as of right now, I'm not too worried about it. Intel, by the time you guys watch this video, Intel's earnings will be released, so we're either going to be up a crazy amount or potentially down a crazy amount, but we're able to get into this at around $20 per share. Also a straight nasty downtrend over the past year. Over the past 5 years, just insane downtrend. This one's trading under book value. You know, I thought it was really good potential risk for the potential return, so I thought I might as well build up a position. We're able to build up over $400 position in that one. Comcast has been the one that we've been recently building up on, about a $400 position there. Also pretty crazy downtrend. I don't know if you're seeing a pattern here, but we're kind of sticking to a little bit of contrarian plays. A lot of the stocks that we've already sold off basically bottomed out. We bought up a bunch and we sold at almost tippy tops. So that's why we've got over a 30% return, but then you're looking at the portfolio and thinking, what the heck is this guy doing? How did he get 30% return? All of these stocks are like a couple percent up. Anyways, that's why, because we actually sold stuff off. That's the baby crying. Anyways, now that the baby stopped crying, that's exactly why we're up 30% and you don't see super crazy gains, other than JD right here and PayPal right underneath over here with 57% return on both of them. These three, JD, Alibaba, and Baidu, these three stocks I think are going to perform very well this year, especially with the current administration. I've got some high hopes for it. But looking at all three positions, we've got 400 here, 360 here, 350 there. So we're just about at $1,100 in these Chinese stocks. So that's almost 20% of our total portfolio, which is totally fine. It's a little bit much, maybe if you're looking at it from a conservative point of view and you don't want to go too heavy on risky stuff, but we're doing a 10K challenge, so what the heck. Anyways, I have some high hopes. PayPal is a company, we got $300 there. PayPal is a really good company. It's got really strong earnings, strong growth. I've been thinking about potentially selling this one because we're up so much, but I don't want to make the same mistakes as I've made in the past, selling something off because it went up a lot. Because you know what? Those things kept going on up, i.e. Meta. Anyways, we're going to just hold this one because, who knows? Maybe there's going to be a crazy bubble like this one and we'll end up cashing out 600%. All right, let's go down to our last three. So Atcore is an interesting one. It seems like somewhat of a strong play. I'm not 100% familiar with what they do, but from a contrarian point of view and based on looking at other graphs, not exactly this one, but if we go to candlestick, this is looking like, it's hard to see on this app. This is why I use Webull for a lot of my graphs on the go on the phone. But anyways, we had a dip here back in 2020, dip here in 2022, then we got a massive dip here. So based on some graphing that I did, I basically decided that this one might be a potential good reverse trend play. So that's why we got $200 in it. I'm not too also the PE is dirt cheap. Price to earnings ratio of about 6. So a little crazy. Their earnings are expected to fall. So it could honestly end up going to like 15 PE, but I'm not too worried about it. That one's just a little bit of a risky play, and we've got a super small position in it. Google, a little bit too expensive still. Today, you guys are going to be watching this on Sunday or Monday or whatever. Today, the stock market corrected like crazy, and it might potentially continue correcting. But Google dropped over, I think, 5%, in pre-market today, and went up just a little bit. Even with this drop, the price is just not right yet for me to continue building this position. I would love to, but if we were to see it go to like 180, maybe below, I would be willing to buy it. The only thing about like Google and a lot of the super large cap stocks is that if I buy them up, I'm probably not going to get a crazy return on them. That hasn't been the case, obviously, the past several years. The Mag 7 basically led the S&P 500's gains over the past several years. But anyways, I don't want to buy too much of these mega cap stocks because I'm trying to beat the market. I'm not trying to match the market. I'm not trying to be like 2% under the S&P 500. We're trying to break the market returns. So as you can see, we got 10 alpha. Anyways, yeah, that's maybe when we'll start buying Google at like 180. Stellantis is just another one of those plays where it's just like, you know what, this is like too cheap to pass up. 12.5% dividend yield. I don't know if that's going to hold true, but a PE ratio of under 3, which is crazy for such a company that's been around forever. Crazy downtrend. Also kind of like Atcore. If you can see here, we got a nice dip, 2016, nice dip, 2020, dip 2022. And almost on all of these, you can see it's been a higher low and higher high, sort of. other than here. I'm kind of expecting it to trend back up. So that's why I picked it up. I'm thinking it could be a potential 100% return. Obviously on 120 bucks, that's not much, but every little bit counts. And that's exactly why we've been able to achieve pretty dang good returns on this in this portfolio, is because we made small positions. They went up like 40%. We cashed out and we did a bunch of trades buying and selling. And that's how we were able to achieve it. Anyways, that's the portfolio. Just in case you're interested in this little Roth IRA account on Robinhood, I've been doing $1 a day, so 1/10 of what I'm doing for the $10 a day challenge. I've been doing $1 a day into the S&P 500 and $1 a day into SCHD, which is a dividend ETF. And look at this. $1 a day. So if you look over here, we got 6,100 bucks. Now imagine 1/10 of that, that would be 600 whatever, 15 bucks or whatever it is. Both of these are well below that. Also, what's interesting is the S&P 500 is slightly below the dividend ETF. So both of these have actually been performing about the same. But the S&P 500's usual returns are a lot higher. So I thought that's just a little bit interesting. Usually when things get fairly overvalued, strong dividend companies actually prevail in the returns. So as you can see there, the S&P 500 had like 80+% return. This dividend ETF has under 50% over the past 5 years. I'm kind of expecting this dividend ETF to potentially outperform the S&P 500 over the next couple of years. And you know what? This little $1 a day experiment will show whether or not that becomes the case. But that's the Roth IRA. That is the $10 a day challenge account. That's basically it. Also, guys, in addition to Robinhood, I do have another brokerage. It's called Moomoo. And I promised on the last video that I'm going to let you guys know if I see any crazy offers that any of these smaller brokerages have. And Moomoo's having a crazy good deal. It's basically 8% return on your money and up to 30 free stocks. I think if you deposit 100 bucks. So I'll leave that link in the comment pinned and in the description. So if you're interested, check that out. If you end up signing up, I get, I don't know, some stocks or something like that. So if you're wanting to take advantage of these smaller brokers, might as well take advantage of that one. And I'll make sure in future videos, if Webull has a promotion or whatever, I'll make sure to call it out for you guys. Anyways, if you enjoyed the video, make sure you hit that like button, subscribe to the channel, and leave a comment, literally anything. We need as many comments as possible so this video can get out to new viewers. I appreciate y'all for being here, and I'll see you in the next one.